What's going on, guys? Stas here. So listen, we just got numbers from Google and Microsoft after the bell. The markets closed red today, but after the bell, after these numbers came out, the markets are pushing green. So we got a lot to break down in this video. Sit back, relax, take a sip of your coffee. Do not forget to get your 10 stocks from Moomoo, each up to $2,500, link down below, and your 6 stocks from Webull, also linked down below. And with that being said, let's dive into the video. And by the way, we're going to dive a little bit deeper into the Microsoft Google numbers here in a couple of minutes. Excuse me, guys. And with that being said, let's get into it. So the S&P 500 ended up closing down on the day about 1.2%. Russell down 0.7%. The NASDAQ got hit the most, down about 2%, as the Dow only went down about 0.7%, doing the best. Actually, no, the Russell did better than the Dow today, but both of them went down roughly about 0.7% each, as the VIX went up 5.5%. Now the VIX is back in the mid-20s. Gold and silver also went down just a little bit on the day. So what we're noticing here, technically speaking, on SPY is we are still above 390. Well, we closed above 390, and now after the bell, we're above $392 a share. We're about to test one of the highs from the middle of the day today, about 392, 392.50. If that breaks, maybe tomorrow, later this week at some point, or who knows, maybe later in the aftermarket hours today. If that breaks, we could see maybe a move back towards 394, 395. But overall, I've been saying this, guys, the fact that SPY is above 390, that is good overall for the bulls. But if they start failing, and by they I mean the bulls, if we start falling under 382, 380, it might get ugly on the downside. But with Google being up after the bell here, and last I checked, Microsoft, that was up as well. We might be going green. We shall see. It's kind of too early to tell. I shouldn't even say that. And by the way, I don't know what's going to happen, guys. Nobody knows what's going to happen. We're just having some fun here. Now, with that being said, let's go over to QQQ, which went down 2% on the day, closed under 300 and 295, under the 50 SMA here on the 4-hour chart, but slightly above the 180 SMA at about 288. 290 here on this time frame. So I think the bulls are still in charge, but like I've been saying, there needs to be buying pressure at about 288, 290. If the bulls fail at that point, bears break through, we go 288, 286, under that, it's going to be ugly here for QQQ. I mean, at that point, bears are going to come in, and there could be more selling pressure. But right now, the way things stand, like I've been saying, SPY, QQQ in the very short term, in my opinion, based off what I'm seeing here, the bulls are still in charge. So with that being said, guys, I don't want to spend too much time here on the overall markets. Let's talk about some good old earnings. Let's pull up Google, which you guys, maybe you don't know, but if you've been watching my channel for a while, you should know Google is my biggest, well, it's not Google, it's Alphabet. Alphabet is my biggest individual stock holding, and I personally own GOOG, which are the Class C shares. You could also buy GOOGL. Those are the Class A, but I bought and I've owned for years at this point GOOG. So this is what I'm looking at, guys, and they closed at about $105 last I checked. Mid 105s, down 2.5% on the day. And here after the bell, guys, Google is up to $109 a share. It got all the way up to over, just slightly over $110 at about 4:05 roughly p.m., just about 5 minutes after the close. So Google ended up doing $1, and the funny thing is they missed on EPS and revenue. They did $1.21 EPS versus $1.31 estimated, and revenue came in at $69.98 billion versus $70.35 billion. And fun fact, and like I said, they double missed. Fun fact, the results marked the second straight quarter of year-over-year earnings declines for Google. It's first time doing that in 7 years, since 2015. So let that marinate a little bit there, guys. The fact that double miss, 2 straight year-over-year earnings declines, first time in 7 years, and the stock is moving up. This goes to show you can't predict earnings, and this is why I never freaking play earnings anymore. I used to do it, lost a bunch of money doing it, as I'm sure a lot of you guys have lost money doing that as well. And now I just don't do it. I do not play earnings, and this is the reason why. You would think Google would be going down, but no, it's moving up. And maybe it's because people were expecting worse earnings, and it's not as bad as expected, so they're getting a bit of a relief rally, a little bit of a pop, which is what we're seeing now. That's definitely possible. So what we're seeing right here, and let me make sure you guys can see it. That's important, not only for me to see it, but for you guys to see it as well. This is the report, right? This is what you see if you go to Alphabet Investor Relations. You look through the website a little bit. You should find it fairly easily. This is what you're going to see. And if you want to dive deeper into this quarter, I advise you guys to go and look at this for yourselves. We cannot go over this entire document now. There's 9 pages. It's not too long, but we don't have enough time for that in this video. But I do want to go over the first 2 charts here. So what we're noticing, let me double check you guys can see it. Yes, you can see it. So what you're seeing right here is last year in the same quarter, excuse me, guys, Google did $61.8 billion of revenue, right? And this year they did just, a little bit under, like we talked about a couple of minutes ago, $70 billion of revenue. And changes year over year. Last year, look at how much the growth has slowed down, which makes sense. And it was expected, guys. 62% is what they grew from 2020 to 2021, right? And now from 2021 to 2022, Google or Alphabet, technically, has grown 13%. That's what you guys are seeing here, which I think is still respectable considering how massive of a company this is, the state of the economy right now. I think that's pretty good, but you got to realize the rate of growth has slowed down in a massive way. And when it comes to operating income, you guys can see here, $19.4 billion this quarter, and last year it was roughly roughly the same, $19.4 billion. Operating margin this year is a little bit under last year. Last year 31%, this year 28%. That makes sense. It's coming down a little bit. And look at this. Net income is down year over year. Like I mentioned, $16 billion is what they did this year. And last year they did $18.5 billion in net income, and diluted EPS is also down from $1.36 last year to this year $1.21. You guys can see that right here. That is, I guess you could say that's not good, but at the end of the day, it's expected, right? It's expected. And what you have to realize is stocks prices, a lot of the time they reflect, predictions or things that could be coming up in the future, right? And this is what was expected. And what I also want to look at here with you guys is the different segments of the business. And let me double check. You can see this perfect. So this is what we're noticing here. We're seeing Google search and other. This went from $35.8 billion last year to almost $41 billion this year. Not bad. And YouTube ads barely grew. That is a huge, huge thing, which makes sense. I told you guys, YouTube ads, I've been seeing this not only the past month or two, this whole freaking year of 2022, YouTube ads have slowly been coming back. I'm still making money on YouTube ads, and a lot of creators are still making a lot of money, but not nearly as much as they were making in 2020 and 2021. YouTube ads were about $7 billion last year, and they still grew, but only to $7.3 billion. Not a huge amount of growth there at all. Google Network, $8.2 billion. This year, 7.6 last year, and look at Google advertising, guys. The beast of the business here, right? $56 billion, $56.2 billion this year, this quarter that just came out, and last year they did $50.4 billion. So decent growth, solid growth, I'd say year over year. Google Cloud, if I could say that right, $6.2 billion this year, $4.6 billion last year. So that's great growth. What is that? 16, let me do some math here, guys. What is that, like 30, 40%, probably 40% growth, 35, very, very good year over year. And that's other bets, hedging gains. We're not going to talk about that. But overall, that's the segments broken down. And we're not going to dive into, again, the rest of this report because, quite frankly, guys, the video would be too dang long, and we also have to look at Microsoft's report very, very quickly, which we might as well just do that right now. And by the way, if you guys are finding value, hit that like button. Make sure to subscribe. It really helps me out overall in the YouTube algorithm. And do not forget to get your 10 stocks from Moomoo with a $100 deposit. Each of those could be valued up to $2,500. Make sure to do that. Link down below. And you could also get your 6 stocks from Webull. And with that being said, cheers, guys. Let me get some coffee before we dive into the Microsoft part of the video. Alrighty, so Microsoft did $2.23 EPS versus the $2.30 estimate. So they ended up beating, or rather missing, on EPS. Let me move my face up here for this part of the video, guys. They ended up missing EPS, $2.23 versus $2.30, on revenue of $51.9 billion versus $52.47 billion. So they actually double missed, guys. Same thing as Google. And let me pop up. Give me a second here, guys. Let me pop up ThinkOrSwim and see what Microsoft is doing after the bell, because I'm not sure exactly. Last time I checked, oh, okay, now it's down. Last I checked, it was up. Now it's down ever so slightly after the bell, about $3-4 to $3 actually a share. So let's dive back over here to the investor relations for Microsoft. And again, all you guys got to do is go to Google and type in Microsoft Investor Relations, Alphabet Investor Relations. The websites will pop up. This stuff is very easy to get to, and we're just going to dive deep, not deep into it. We're going to dive into it quickly. That's what I'm trying to say here. So revenue, like I said, $51.9 billion, 12% growth year over year. Net income was $16.7 billion. So what's the profit on that, the percentage? We're not going to talk about that or try to get into that in this video, but roughly 35%, something like that, maybe a little less, a little more, whatever. But overall, net income was $16.7 billion on the quarter, and that increased about 2%, as diluted earnings per share were $2.23, and that increased about 3%. And let's see here. I remember I was looking at this earlier. Down here, we had all the segments from of Microsoft. I want to show you guys that as well, like I did with, what was it, Alphabet. So let's see here. Where the heck is it? I'm scrolling. Sorry, guys. Bear with me. I know I saw this. Oh, here it is. Here we go. So this shows you the selected product and service revenue constant currency reconciliation, right? Reconciliation, however you want to say that. So essentially, this is showing percentage change year over year revenue growth, right? Or just revenue or revenue decline in some segments, right? And this is GAAP, right? GAAP. So Office, commercial products, and cloud services, 9% year over year, not too bad. And just look at all the segments this business has. I mean, and they do business abroad. It's kind of like, I don't want to say it's an ETF, but there's a lot of, it's not like they make money just from one thing. Look at all these segments Microsoft has. There's 1, 2, 3, 4, 5, 6. I mean, there's over 10. Literally, there's over 10. Office, commercial products, and cloud services, 9% growth. Office 365 commercial, 15% growth. Office consumer products and cloud services, 9% growth. LinkedIn, which was slept on, guys. You know, LinkedIn, 26% growth. Dynamics products and cloud services, 19%. Dynamics 365, 31%. Server products and cloud services, 22%. And the biggest growth came from none other than Microsoft Azure and other cloud services, which makes sense. That's 40%. And they did lose money, or not lose money, but decline 2% in Windows OEM. Also in Xbox content and services. That went down about 6%, as Surface went up 10%, and search and news advertising, excluding traffic acquisition costs, went up 18%. So essentially, everything year over year for the 3 months ended June 30th, 2022 is up. Everything is up except for Windows OEM, which is slightly down 2%, and Xbox content and services, which is down 6%. So that's pretty impressive if you ask me, guys. And again, their revenue, which I think was up, 13% or 12% year over year, that's not too bad. Pretty much right in line with Alphabet, Google. You know, this is, I'd say it's pretty good. And the stock's moving down ever so slightly. And I've been saying that a lot this video. I don't know why I keep saying that. But, you know, the stock's moving down a little bit. Google's moving up. And we'll see how tomorrow plays out. It's going to be a very interesting day, needless to say, in the markets tomorrow, not only because of these big tech stocks reporting, but also we have the Fed press conference tomorrow. We're going to see what the Fed's going to do on interest rates, all that good stuff. So let's pop back over to ThinkOrSwim because there's more, guys. Oh, wait, there's more. Yes, because we had Visa, Chipotle, ENPH, UPS, and Coca-Cola also report earnings today, and we might as well break those down before we wrap up the video. So let's go over Visa's number one, and this is a company that clearly is very volatile here after the bell, and it's been one that I've been really looking at, not really as an investment, but as a trade. It's been breaking out lately. You guys know I've covered this on the channel many times. We failed now by the looks of it, breaking out of 220. Now we're back under $210 a share. So Visa ended up doing EPS of $1.98 versus $1.74 estimated. So that beat, and revenue beat as well. $7.28 billion versus $7.06 billion estimated. Q3 processed transactions were up 16% as cross-border volume total was up about 40%. So this is down. It's funny, right? Google double miss, it's up. Microsoft double miss, it's down. Visa double beat, it's down. That's just how, it's just funny how things work, guys. But overall, this is not one that is completely out the window now in terms of me looking at it as a trade, just because it didn't break above 220. Because at this point, we might be able to get it in the lower 200s where buyers might step in. We're right by the 50 SMA here at about 210. If that point breaks, we might go to 205, and that is where we could get the buyers. If buyers step in there, that'd be where I'd want to look at. But if we start breaking under 200, on the flip side, that's not going to be good, guys, at all. So Visa, keep your eyes on it. Double beat, not bad. Chipotle Mexican Grill is freaking ripping, guys. This thing is up $100 a share after the bell. They did EPS of $9.30 versus $9.05 estimated on revenue of $2.21 billion versus $2.24 billion estimated. So they beat EPS, slightly missed on revenue, and it's okay. The market is forgiving Chipotle. As you guys can see, again, it's up over $100 a share here after the bell, and they still see, and the reason is the market's forgiving that miss on revenues because they reiterated their guidance. They still see Q3 comparable restaurant sales growth in the mid to high single digits, as they still see, on top of that, 235 to 250 new restaurant openings in full year 22. That's good, guys. They're up in that, or not necessarily upping, but as a lot of companies are not reporting guidance, cutting guidance, they're reaffirming their guidance on comparables, restaurant sales growth, the fact that they're opening up new restaurants. And let me see if they provided guidance for EPS or revenue. Let me see here. Actually, I'm not necessarily seeing that, but overall, either way, at this point, it's still up a good amount. We're talking, again, over $100, which equates to about 7.5% here after the bell. So I'm going to be watching Chipotle as it is now slowly but surely reversing, above that 1,400 price alert I have here. And now it's at a multi-week high, and it's above both moving averages. So let's see what Chipotle does in the near-term future, guys. If we start moving mid 1400s higher, this could start going 1650. That is the next big gap to fill by the looks of it on this chart here on the 4-hour chart, guys. So let's go to the next one, which is known to be very volatile, very crazy around earnings. It is ENPH, ticker symbol ENPH, and today is nothing different, guys. This thing is freaking on fire after the bell. It's up $16 a share. They ended up doing $1.07 EPS versus 84 cents estimated. Revenue came in at $530.2 million versus $504.53 estimated. So double beat. And like I said with Chipotle, what did I say, guys? Companies, or rather people, investors, they love seeing companies reiterating guidance in times like these, raising guidance. They don't like seeing cutting guidance, or people or companies not giving guidance at all, right? And in this case, ENPH raised their guidance for the next quarter. They raised their guidance. They see Q3 revenue of $590 to $630 million versus $548.79 million. Well, I don't think they necessarily raised their guidance, but what I'm trying to say here is their guidance, or the guidance for revenue, is a lot higher than the estimate, right? Which is great. So ENPH is breaking out. Mid 230s, low 230s is where it is right now. So look at this. The ascending triangle we talked about is playing out. So at this point, guys, we could be breaking out towards the high 200s, mid-high 200s, at least by the looks of it. Let me just make this up to date. You guys can see the ascending triangle, boom, is playing out. We called that out here on the YouTube channel, guys, which is why you got to subscribe. If you haven't done so already, make sure to subscribe and hit that notification bell. And let's go to the next stock, UPS, United Parcel Service. This ended up going down 3.4% on the day, and they actually double beat. $3.2, or rather $3. I don't know why I said it like that. $3.29 versus $3.16 EPS. That beat. And revenue also beat. 24.8 versus 24.62 billion estimated. And funny enough, like I said, stocks work in mysterious ways. This stock went down 3.5% on the day. So what I'm looking at here on UPS, let me show you guys this horizontal channel. Look at that. We're still in a horizontal, not really horizontal, but an uptrending channel. You guys can see buyers are stepping in at about 180, 182. Let's see if this continues. Maybe we make a move back towards 190, maybe 195, top of the channel. Watch out for that here on UPS. And the last final stock, Warren Buffett's favorite. It is Coca-Cola, guys. Ticker symbol KO. They did 70 cents EPS versus 67 cents estimated on revenue of $11.3 billion versus $10.54 billion estimated. And they see full year 22 revenue growth of 12 to 13%. Adjusted EPS up 5 to 6%. Jesus, guys, I need a little sip of coffee to that because this stock just keeps crushing it. I don't know what to say. And the funny thing is, I don't own it. And the truth is, I have said time and time again, this stock is overvalued. At these levels, I'll say it till I'm blue in the face. I don't care what people say. This stock is ridiculously overvalued. So they might be crushing it right now. Their stock price might be good right now. But I'm not touching it. Honestly, I'm not touching it. Their P ratio, last I checked, was almost 30. So it's a little overvalued, but they are doing well in the short term, and by the looks of the chart, we have to look at it, at least I'm looking at it, as a trade, not as an investment, but as a trade. Now that we went up about 1.6% on the day today, broke out of the moving averages, clearly still holding this uptrending channel, this could start moving up towards $65, $67. I mean, on the upside, that is where this could be going based on what I'm seeing. So that's it, guys. That's it for the video. That is, it's a good time to wrap it up. If you enjoyed it, you know what to do. Hit that like button. Make sure to subscribe. Join my Patreon, or at least check it out. That's linked down below. And if you guys want 10 free stocks, don't forget, Moo. Use that link down below. Get your 10 stocks. Each of them could be valued up to $2,500 with a $100 deposit. And you could also get 6 stocks from Webull with any amount deposited. And with that being said, cheers, guys. A little bit of a longer video today, but I had fun making it. If you enjoyed it, again, let me know your thoughts in the comments. I'd love to know. And with that being said, I'll catch you in the next video. Thanks for watching. As always, peace out, guys.